Okay, let's go ahead and get started. We'll you guys give me an audio check, and we will just dive right into it. I got about 30 minutes to do the live stream, and then I got to get going. So I'm gonna just do a quick run through on where we left off on Friday, and then I'll dig into whatever you guys got, and then we'll wrap up. Triple Qs. And just give me that audio check in the comments. Let me know if you guys can hear me. But the triple Qs you can see here that we closed. Let me grab my little tool. Closed at downtrend line resistance. Okay, we even got a little reaction on Friday. You can see it's starting to pull back there. If we go down to the hourly, you can see, basically ran right to that level and just held. It just stuck. It was just right there. So closing Friday at resistance. We'll see how Monday, brings. It's probably going to get pretty choppy coming into the Fed, maybe. But in general, it should be relatively low kind of volume and low market consensus, because you're going to have the big players, the big money sitting, waiting for the Fed to kind of clear out what they're going to do. And then once they kind of clear that out, then we'll see where the market wants to go with the big money. The Fed, I think right now it's priced at 25 basis point rate cut. It's super high probability, so that's the way I'm leaning, 25 basis points. And they'll probably, from what I saw a headline where one of the governors was floating out, they're going to go slow and steady on the rate cuts. That was kind of the basic headline. So, maybe they'll come out and reiterate that they're not going to just be really aggressive on rate cuts. They're going to be slow and steady, and the market will panic and, sell off. I don't know. But in general, as of right now, at resistance. So it tells me we should get some downside. Obviously, if we break out from here, then that would be a technical change. So just keep an eye on that. And then let's go to the futures. You always want to line that up. Here's the NASDAQ futures, and you can see rolling out. Look, this is an hourly chart, but it shows on the daily as well. Resistance, and right there, resistance. Oh, yeah, just moving stuff around is such a pain sometimes. Resistance. So there it is on the daily. Same deal. Closing at resistance. Kind of an isometrical triangle we got going on. It's compression. Okay, so tells me, if we hold this pattern, probably going to go down and then ultimately break one way or the other. Down is bearish, up is bullish. You break down, you're breaking the major trend. You break up, you're, maybe making a run at new all-time highs. So in general, who knows? I don't know which way. I know we're at resistance now, so I'm expecting a pullback. And then what else was, we could look at the SPY. The SPY basically closing there at resistance. Yeah, let me see if I can mark that out. Got to kind of clean up my chart as I go. I don't trade the SPY, I just kind of keep an eye on it. But yeah, right in there. So basically resistance. And then if you look at the ES SPY futures, yeah, basically right there at resistance. Same deal. So closing at resistance on the S&P, the triple Qs. What about semiconductors? Because that's, look at that, right at resistance. And that one actually has four yeah, that'd be the fourth reaction. 1, 2, got another one there, and then so it helps validate that. So multiple reactions there on the SOX. So at resistance there. Let's look at NVIDIA. I mean, the resistance I have on NVIDIA, there's obviously this downtrend. Well, it's not even really a clean downtrend because I only have 2 reactions. I can't even really count this one here. So I've got that and then this cluster. But there is a lot better resistance right there. Resistance, resistance, reaction, reaction. A little reaction there. There's a gap down. And yeah, it closed above it, but just barely. So in general, kind of at resistance as well. And that's basically it. I mean, that is in general the market that is there. Oh, financials. We want to look at that one too. Hourly chart on the financials. You know, I have it marked like this. Yeah, that's in general. It's not bad. I mean, could do something like that, but I think it lines up more clean right there. Look, once you hit that, boom, big impulsive selling, hit it again, big impulsive selling, hit it again, and just kind of holding. So also keep in mind that if this thing breaks out, or like any of these sectors start to break out ahead of earnings, or not earnings, but ahead of the Fed on Monday or Tuesday, I'd put a pretty good probability that it's a false breakout. So, you know, because you're not going to have big money making huge moves right ahead of a Fed meeting that has major implications on interest rates, the dollar, you know, even the stock market. So that is, you know, you almost kind of we have to give it a little bit of flexibility as we go into this Fed meeting on the technicals, because this is where the, you know, in the 2 days leading up to it, volume probably will dry up. I think it will probably be relatively light, and you could see market makers and stuff kind of chopping things around and running games and popping stops and things like that. That kind of happens. They can do that in the low volume. All right, so that's what I got on the markets. JP Morgan also, you know, I'm looking at NVIDIA and JP Morgan, because that's the two sectors that have been pretty weak, as financials and the semis. And and those are the leaders. And JP Morgan, let me see what I have on the daily here. I mean, I've kind of got that as support right there, basically. Gap, and really, I feel like that one kind of closed at support. So, yeah, I don't know what to make on that one. And yeah, that's it. All right, so I'll just dig into your guys' stuff and we'll wrap up. We'll keep it short and simple. Boeing. Boeing was in a downtrend. All right, broke out there. Sideways price action. Yeah, I just see more down. I mean, I don't, you know, there was slight bullish divergence there. You did get the move up to that resistance level in the 200-day, and it was a clean rejection right there at the 200. So, I mean, I don't see it. Yeah, I mean, the PPO's looking like it's going lower. RSI, I mean, it's divergence now, but it's not really confirmed. You've got the PPO pointed down. You've got the RSI pointed down. So, I don't know. This trend line here, that to me looks like support, and I've got it circled, and that's what I'd be expecting. More downside, no change. I mean, look, it's just going down. Lower lows, all right, lower highs. It's downtrend. So I would look for a continued move down over time. It's going to take a while, down to this major trend line support, and down there, and you maybe undercut these lows here, maybe not. But down there, I'd be more interested in a long trade on that one. Ulta. Rally into resistance, basically. You know, it's kind of choppy right around that level. I might need to adjust my level just slightly up to about there. But yeah, it looks like a rally into resistance. I don't see any real technical change. All right, sorry guys, had to sneeze real quick. That's Ulta. Lift, rally into resistance. Yeah, so I mean, there's nothing going on here. I mean, it's a short basically because you rallied into resistance, very similar to the rest of the market. Okay. And, you know, I mean, you look for support levels. Obviously, like the reaction low, that'd be a support level. That'd be the one I'd really be interested in. And there's another reaction there, so you just kind of mark that out. And right there, support. So I move down to support. You probably get a bounce. A break of support would be a major sell signal. It should go lower. But this thing's... it's so low. It's $11. I mean, you start going much lower, and you're probably talking about bankruptcy. So, I don't know. Is Lyft gonna go bankrupt? Maybe. I mean, the Uber and Lyft kind of compete, but I think people do use both. All right, so that's Lyft. Snow. Again, yeah, you get some bullish divergence here on this one. These are divergent lows. That's a divergent low. And that, they spiked it down and made us intraday divergent low. So you do have some of that going on. I think you got this downward channel. I like that better. We'll just count that as it gapped up but sold right down, and I got another reaction there. So that's my downward channel. So in general, what I would say on that one is downward channel, bullish divergence, no buy signal. You can buy at support, but it's higher risk because it's a downward channel, so it can continue to go lower. Or you wait for a breakout of resistance, which is the higher probability, lower risk trade. I'd prefer to do that. With the setup of the markets, how they're set up, with everything at resistance, I could see this thing making another low. And yeah, so I would wait for the buy signal, which would be a breakout of this downward trendline resistance. All right, that's that one. Nike. That's your gap. That's where it gapped down. So that's a reaction level, and it closed basically at support. So, you could buy that support for a push up. And then if it breaks below, you stop out. So set your stop kind of below there. Don't set it right there. You want to kind of give it a little room in case they spike it down and try to stop rage you. But, it's at support. And it had some bullshit. These are divergent lows here. So, yeah, and then, there's your move up. So, I like this one more as a long for a push up to, I guess this trend line is what I have. But keep in mind, the posture of the markets, they're all at resistance right now. So, Lulu. I guess I don't have this one marked up. Let me see what I can do. Just give me a second to kind of, yeah. I guess I have to go with that as my trend line. I don't love it, but that's the best I can do, and that sets it up as a breakout. There's your bullish divergence on the RSI here. It actually had been building for a while. So I don't love the trend line, but I'd have to say, if I can, let me see this one. That's better. I like that trend line a lot better. Resistance, couple reactions there, and I'd go with a breakout there. The only caveat being that we're right ahead of the Fed, which is not my favorite time to see a breakout. And the breakout came on Friday, right ahead of the Fed. I'd be a little suspect of that. They might try to run this thing up Monday and Tuesday ahead of the Fed. So, if you see a run up into resistance levels, I'd probably just lighten up or, ahead of the Fed, let that play out, and then you can let the dust settle. That's what we're also seeing in like Unity. This thing couldn't break, look, it's in a downtrend line. It broke out, but then it just starts back testing. And then on Thursday and Friday, right ahead of the Fed, they just start smashing the thing and just start jamming it up. So, I wouldn't give this one too much room. You might get up to this resistance level by Wednesday. I would take my money and run ahead of the Fed. All right, so that's that one. All right, Kohl's, KSS. This one's like, I think this one's going to go bankrupt, aren't they? I don't know how these guys are. Are they paying a dividend or do they cut it? Dividend yield 10%. They're going to cut that. No way can this company afford a 10% dividend yield. So don't get suckered into that kind of stuff. You know, they're going to cut that dividend. I suspect they'll cut it probably. Look at that. Downtrend, the stock's trending lower. No way are they going to keep that dividend. They can't afford it. Let me see what these technicals show us. I mean, you got a little bullish falling wedge pattern here. Slight bullish divergence. Yeah, it's kind of bullish. The only problem I have with this one is that dividend's way too high. I would prefer to see them cut that dividend, let the stock do what it's going to do, which would probably be a decent washout. Then you could look for a bullish setup. I just don't see that dividend being maintained. So very likely that's going to get cut. So that's my read on it. I honestly, I'd stay away because the chart's not that bullish. It's not that clean of a chart. I've got a little bit of a wedge. I have no buy signals. You're still in the wedge. So again, any kind of headline dividend cut news, this thing's going to flush out. Then it might, then it might be a little bit more constructive after you get that washout move. GCT. Downward momentum. See the momentum is just dropping. Price is dropping. So it's in a downtrend. This thing. What do we got going on here? Yeah. I don't know. I'd say it's heading down to a more major trend line of support. You're going to have reactions. So obviously you got this spike reaction. I thought I had one. Looked like it lined up. I don't like it. I think it's going lower. That's what I'd guess. CAG. So that's your downtrend line. Okay. A buy signal. If I was watching this, you kind of broke out here, but it just muddled around. It's not a very clean buy signal. That would be a buy signal. Of course, the very next day it's followed by a big drop, which sucks. You have to ride that out because, that would have said, okay, time to buy. And then they would have dropped you 2%. But it held support. And it's running. I don't see any negative divergence. So that looks okay. And I see an uptrend. So, and it's at, it just recently hit support. So this one looks like it's going higher. I don't know what these guys do, but they, this looks, I'd be more interested in buying the dip on that one. FTNT, tech stock, but acting bullish while everything else was selling. Yeah, well, let's look. That's an earnings spike. Negative divergence. You see, this is the stuff you have to look for. Yeah, acting bullish. If you owned it here, which I guess was at support, you're basically there at support and right into earnings. Earnings comes out, you're at support. Technically, they buy it. Gaps up. If this thing was at resistance at earnings, it probably would have sold off. It doesn't really matter half the time. A lot of it's technical based. Gap up, run up. But look, now, if you zoom in, momentum is dropping. Okay, so there's the peak in momentum, and less your momentum's dropping. So you've got divergent high, and even that's kind of a divergent high. Might want to make a new divergent high. So just because you have divergence doesn't give me a reason to just sell it. But it is starting to diverge and momentum is dropping. So I would be more interested in looking for a sell signal. Technically, if you really want to see the sell, I mean, you can trade this candle here. See, that's a bearish engulfing candle right there. Boom. Outside day / bearish engulfing. And so that is, if you want, one way to trade it is just, there's, daily close above that level. And I'd just probably move it up to the high right there. Daily close above, you get a daily close, and not just like it right there above it. If it's like, boom, a solid green candle, 2% or so, you really can tell, okay, that is a daily close above that high, then you stop out. Otherwise, you can trade against this bearish engulfing and say, okay, that's a topping stick, and this is the top. All right, so it's the top until you get the daily close above that kind of level right there. That's how I would trade that one, because you got the negative divergence, you got the bearish engulfing. That's enough. Okay, so Fortinet, are these guys like firewall stuff? Let me see here. I'll add that to my shorts. All right, I'm just going to go through what's left on the list, guys, and then I have to get going. So we'll go with Levi. Something like that. It's not the best trend line, but best we can do. Yeah, I don't know. Something like that. Gap down, bullish divergence. Usually you'll start seeing bullish divergences after you have a large gap, either up or you'll see divergences after you have a large gap, either up or down, like on earnings. Usually it starts to build. So these are, divergent lows. Your buy signal, if you were waiting to buy, because this thing got flushed out after earnings, right? But usually it takes a little while to kind of flush out. So, I mean, to me, that's my buy signal, that gap up. That's a gap up, recovering the 200-day moving average, gapping above this downtrend line. You got the bullish divergence. So that, this looks constructive. I'd probably just, this is not a clean trend line. I only have 2 data points, but I like this one. I probably want to be more long this one and buying at support until, this is the trend line I can make. There's only 2 reactions, so I can't trust it. But if you get a third, I could start to trust it, and then you could, and then you'd stop out once you break support. But I don't see any divergences or anything, so tells me that it can continue to move higher. Maybe go fill that gap. MPW. Yeah, I mean, they just do that right ahead of the Fed. So I don't know. I wouldn't touch it. I mean, if you're long, you can ride it up, but this is doing the same thing as gold. It's all based off the Fed. All right, like here's the gold miners. Oh. It's all interest rate stuff. You can see same chart. It's all Fed based. They're all like, oh, the Fed's gonna cut like crazy. It's gonna be great for gold and real estate, because MPW's REIT. The dollar, and the dollar's kind of moving opposite. Although you had a little doji there, so I wouldn't trust the dollar's just going to drop. I'm not exactly seeing that. Okay. MPW's not, if it's a short squeeze, maybe, but in general, you're seeing that kind of price action across all the interest rate sensitive stuff. Like if I go to my home builder stuff, I got a little home builder thing, there it is, PHM. So, I mean, if you're getting a short squeeze, it's in all of the interest rate sensitive things. So they're just pumping it into the Fed. Riot, well, that's a Bitcoin. That's a Bitcoin proxy. Same with There's a couple of them. But right, this is a Bitcoin proxy. Yeah, that's a garbage trend line. I don't like it, so. All right, so I like that lower support here. I got multiple reactions. You undercut it. You don't really have bullish divergence there. You kind of do there. I don't know. The way I would play this one, if you can recover this trend line, which you haven't been able to yet, but if you can, it'll come in a gap up or something, a bit spike up. That would be the buy signal. Otherwise, you get rejected. So that's how I treat that one. Okay, save. Spirit Airlines travel, budget travel, I think. Downward trend line. Kind of tighten it up. I like that trend line there because I've got multiple. Yeah, that's the one. So bullish falling wedge, no breakout. So that if it's really close and you can't quite, it can't be like, yeah, that's definitely a breakout. Then don't count it as a breakout. So in general, you don't have a breakout here. You do have some bullish divergence. So I'd be looking for a long on this one. All right, this is a long setup, but no buy signal yet. So it's definitely a pretty clean long setup. All right, that's what I got on that one. And then keep an eye on the sector as a whole and the other airlines. But I don't know, maybe this is a buyout target. That's probably what they're banking on. Is I know there was a merger issue that got rejected. So I mean, it's 250. It looks like they're going to go bankrupt, I guess. I'm not going to buy this thing, but there is, maybe they're going to probably float some news about like a potential buyout, or they're going to let them merge eventually, something like that. And then, you might just get like a big, huge short squeeze, but it's pretty high risk. It's a junk stock. It's definitely not my kind of stock that I like to trade. And there's no buy signal, so I'd have to wait for that buy signal, and you might get like most of the price action all on that initial buy signal, where it's just like boom, like a big spike up. And those are really hard to play because I don't want to go long something that's just exploded already. So I don't know, maybe it doesn't do that. Maybe you just get a nice clean buy signal and you can buy it and it runs up. Okay, Ravi, I've already covered a couple of years, so I'm going to move on. Micron. I'm gonna do two more, guys. I can only do two more, okay? Said I go for a half hour, and that's about 2 minutes from now. Micron at support. All right, that's it. That one's at support. Bouncing off support. That's support. And it's slight bullish divergence. So yeah, that one is not a short. That's at support. It's probably, that looks good. It's interesting though, because that's at support, but then you got the sector SOXX at resistance. So, who knows? Might sell off, and maybe Micron kind of chops around and holds. I don't know. It's at support. Until that support breaks, I don't want to short it. The only plays long. And then, all right, two more. So, I don't want to cover Apple because I already covered triple Qs, and in general, that pretty much covers Apple. CEG, right? This is a utility. Okay, this is, they're kind of boring, but dividend yield. Utilities are interest rate sensitive. As interest rates fall, typically utilities suffer, I think is how it goes. There's some support going back to 2022. I don't have clean resistance, but there's support. Bouncing off the 200. I mean, look, they bought the 200. Okay, when you're at the 200, you almost want to expect a bounce. They bought it. This one kind of looks similar to the rest of the market. You're at, you're basically at resistance. All right, so looks like the triple Qs, and that's it. So I think you probably get rejected and could head lower, back down to support. All right, one more. Let me see. IWM. You guys want me to small caps? You look at the small caps. There was this narrative of rotation. Yeah, see, the small caps are. This is the interest rate trade. All right, it's the same as the. It's the same as the housing and the gold and stuff, because it's basically saying, okay, small caps are not profitable companies, or many of them don't make a lot of profit. They're very dependent on borrowing, and the cheaper they can borrow, the more, the better. And so if interest rates are going to fall, then small caps are going to benefit. That's what's going on with this ramp up. But I think we've traded into resistance. All right. If I get rid of that line, to me, that's what it looks like. All right. Resistance, 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 resistance. A pump into resistance. I don't know. I can't imagine we're going to break out ahead of the Fed. And if you do, I wouldn't trust it. But maybe we just muddle and grind around, slight pullback into the Fed. Then we'll see. But as of right now, into resistance. And that's it. Until that changes, you short at resistance, you buy at support. It's very common sense. That's all I got, guys. So you guys have a good weekend. And I'll catch everyone on